Good evening, everybody, and welcome to tonight's webinar. My name is Rebecca from the BDA events team. A very warm welcome to you on this sunny Thursday evening. Now on to Arun. Arun is the CEO of Samera, so we'd first like to thank Samera for all their help and support. And Arun is here with us tonight. Good evening, Arun.
Hi, Rebecca. How are you doing?
Hi, good, thank you. How are you?
Yeah, very well, thanks.
Good. So Arun has almost 20 years experience helping countless dentists across the country looking to start, grow or sell their practices and their businesses. So he's got loads of really helpful information for you tonight.
Thanks, Rebecca. Thanks very much. Good evening, everybody. And welcome to this seminar on how to save some money, some tax, and perhaps become a bit more efficient with your time in your dental practice in 2022. Now, as Rebecca mentioned, I've got a difficult task. I know everyone's sweltering, I know everyone's hot, but I'll try and keep this topic interesting and relevant to everybody that's out there. I've got quite a few slides to go through. I'm really going to do a kind of large brain dump to you and hopefully share some ideas, and hopefully after the event you'll be able to go away and have some thoughts, and if you have any questions, just please do reach out and come back to me. So without further ado, a little bit about myself. I'm a chartered accountant, trained many years ago. As you can see, I've got lots of grey hair, and that grey hair has given me a lot of experience in understanding practices, running practices, building practices, but also we've learned and made a lot of mistakes as well. I'm the owner and CEO of Samera Business Advisors, which are chartered accountants, commercial finance brokers. We are a practice sales brokerage agent, and we also run a buying group, which I'll talk a little bit about later. But I also own the Neem Tree Dental Group with my wife Smita, who's a dentist, and they're private clinics in the London and Surrey area, which are performing very well. And prior to all of that, I used to be I trained as an accountant with PwC in London, and was investment banker for a while, but then I married a dentist, and basically everything changed after that. So tonight I'm going to really cover a range of topics. Tax, well, not tax, tax is second, how to save some money, how to save hopefully or manage your taxes better, and then also just looking at some of the efficiencies that you can run in your practice, particularly from a business perspective, that you'll need to take on board as your business develops. So, wow, so we're in a time where it's a perfect storm. So what do I mean about that? Well, what do I mean by that? We've had, sadly, COVID-19 during 2020-21. Very sadly, we're in a war at the moment. Western Europe is with the Ukraine war. We're now seeing inflation rising. The Bank of England mentioned today that they think it's going to hit 11% later this year. They rose interest rates this year, today actually, to 1.25%. And in the US market, we also saw interest rates rise by 0.75 yesterday. So today in the UK they rose by 0.25, and they rose by 0.75 in the US. We're seeing energy rises. The stock markets are like a yo-yo, very volatile. Yesterday it went up very high, today it went down very much. So, and we're seeing various tax rises due to COVID-19 over the next 12 months, and ultimately possible recession. So it sounds pretty bleak, doesn't it, really? But with some planning, with some forethought, with some experience and guidance, hopefully we can be aware of what the issues are and perhaps make some changes in our respective businesses. So today's talk, or today's webinar, is primarily aimed at people who might be having a practice or looking to get a practice, or who people work in a practice, and just hopefully you'll get some ideas and tips as I go through this today. So first thing, I'm going to talk about some money saving tips. I think, as I said earlier, we're seeing inflation, so everyone's looking at how can I cut my costs. If you look at good old the Money Saving Expert website, there's so many personal tips on how you can save money, but there's never really much information on as a business how you can save some money. So I've just put across a few ideas in this presentation today on this. Okay, so let's crack on. But the first question I have to ask is why would you save some costs? Well, bottom line, you want to increase your profits. Okay, if you increase, and I'm an accountant, so the bottom line is you want to increase your profits. But this all links to, if you're running a practice, if you've had your practice valued in the last few years, or thought about getting it valued, every value is determined by the profitability. So the larger the profit, the more valuable your business is. So for every £1 that you saved in your practice value would go up by typically a larger multiple. So for argument's sake, around 6 times. So every £1 you saved, your value of your business would go up by 6. And as you may be aware, values are based on a multiple of EBITDA, ultimately profit. So the key is to raise that profit. So the key is to think, how can I raise my profits while still offering great level care and being an efficient practice, and ultimately increasing the value of my business? So if we just look at this slide here, this is just a very quick example, really. A practice that's earning £1 million a year, costs are 850, EBITDA 150. But if you manage to cut the cost by 10%, the EBITDA goes up to 235 because the costs have dropped from 850 to 765. That is an increase in your profitability of 56%, which is a significant gain. So if you can cut your cost by 10% in this scenario, the profit increases by almost 60%, a large increase. That's why you try and cut your costs. Now, this is going to move. Now, how does that translate into a valuation? So if I use a multiple of 6 times, the profit was 150. If you times that by 6, you get a value of 900. If you cut your cost by 10%, your profit goes from 235 to 1.41 million. So it suddenly shows you that there is huge benefit in trying to reduce your costs, okay? Because ultimately that will have an increased impact on the value of your business. Now, if you think about it, also in this dental market, there are a lot more buyers than there are sellers. So I personally think values will remain relatively resilient, okay, over the next few years, despite the economic turmoil which we're kind of anticipating. There might be some impact, but I think as there are more buyers than sellers, that ultimately demand outstrips supply at this stage. So now, how does this then translate into how you're going to save some money? So these are just some quick figures just to highlight to you. Average figures for a dental practice. So for argument's sake, lab bills are around 7% of turnover. Staff costs are around 17% of turnover. Got that wrong, so we moved on a bit too quickly. The material costs are around 7 to 8% of turnover. So there's all these costs in a business, but we have to start thinking, how can we actually start trimming these back as a percentage of turnover? So there are certain things you can cut back. There are certain things you can cut back on staff costs, maybe, material costs, associate costs, other overheads, but you might be saying, well, in this rising market, I might not be able to do that. And you're absolutely correct, but these are percentages of turnover. So we have to look at both angles here. How can I save money? How can I save costs? But at the same time, I might have to change my pricing model, might have to try and generate greater income. So I'll come on to that in a moment, though. So one of the costs that we see all the time is finance costs. Now, I won't go into detail of this slide, but one of the things I've seen over the last few years is there are a lot of lenders out there in the marketplace, particularly short-term lenders who are lending money to dentists and other people, say on 5-year terms. The reason dentists tend to go to these people is because it's quick, it's easy, you just fill in a form online and within literally hours you might have £50,000. But one of the points you're missing is you're being charged usually quite an extortionate rate of interest. Maybe not as high as using a credit card, but you could be charged anything 8, 10, 12, 15% on the value of the loan over a short period of time. And they market it as flexible loans and you can pay it back any time, which is great, but you're paying at odds, you're paying rates which are very, very high. So the key tip here is if you do have any short-term debt, whether it's credit card debt or it's a debt over a 3, 4, 5-year period, it's really important to refinance that and to look at how can I reduce that. So rather than paying 8 to 10%, you might be able to get it down to 2, 3 or 4%, which will have a massive impact on your profitability in your practice. So really trying to get to the point here, look at your finance costs, whatever agreement you have, whatever arrangement you have, get in touch with us. My team, my colleagues, Nigel, Dan, Julie, Simon, all of them will be able to help you save money if you've got any short-term debt. And if it's a short-term debt on your credit card, or if it's short-term debt with any of these short-term loan providers who all look very trendy and very kind of do it online, but the actual idea is they're basically ripping you off. So get your finance costs reviewed. One of the other things that happened as a result of COVID is there was supposed to be a revaluation of business rates in 2021, but due to COVID, that's been pushed back to 23. So one of the things you will want to do is push your local valuation office is make sure you get your rates revalued. As a result of COVID, so many shops have closed. Therefore, the rateable value of properties will have fallen. This will then impact in you paying lower rates. So that's an important thing to highlight and get onto your valuation office to come and do a valuation of your business or building sooner rather than later, because again, you'll be able to pay lower business rates. Another area, staff, team. We've seen time and time again, and I know it's a difficult environment at the moment, but hiring temporary staff is expensive, and it's difficult to always sometimes to hire the right staff the first time either. I know that from experience. But negotiate any recruitment fees in advance, but also for staff members, perhaps if you can incentivize them, if they do X or bring in X, you can then give them a large amount of money rather than having that one big fixed cost. So, and then a bonus is paid in that situation. So, but remember, I do know team members are feeling the pinch at the moment. And I know my wife's clinics, people are having to pay higher energy costs, higher mortgage costs, and your job, and the most important job in any business, is to not to have great profits, it's actually have a great team, because if you have a great team, everything else will fall into place. So you have to think about how will you pay for these pay rises, and I'll come on to that in a minute. So really think about that in terms of you want to keep the good staff members, and therefore you may need to raise your salaries to them. Too far. Associate pay. Over the years, I know for ourselves, we've always paid associate level pays between the 40 and 50% of income or fees generated. Now you have to think, which is better? Is 40% of 1,000 better or 50% of 750 better? So that's kind of where you have to then have the right type of clinic that perhaps you could charge higher fees, so that a dentist will take a lower cut in their business, in their associate income fees, I say at 40%. So it's important you look at what you're paying and ultimately what is your dentist, or what are your dentists actually generating in practice. If it's a very high earning dentist in the practice, then maybe they do justify 50%. But if they're not pulling their weight and it's costing you money, and that's one of the exercises you should do, is to see actually are they costing you money to actually run that dental surgery, then you have to think, well, either I cut their percentage or I look at alternatives. So associate pay is something that constantly we're always reviewing for clients, actually quite regularly. Digitization, I know again a big area at the moment, from getting an intraoral scanner which sends information directly to labs, to having your own in-house lab in your practice. This will save money, okay, and save lab costs. It potentially can save impression material costs, and you can buy good equipment out there and finance it at low rates, hence the slide about finance earlier, for your business. So it's really important to think, can I have a better workflow in my practice? Can I use technology to help me reduce my costs? And I know from our own experiences in our clinics, we use intraoral scanners. We have we have our own lab in the practice, and it's all done digitally. I'm no expert in that, but I know we have team members who do all this, and it's significantly dropped our lab costs overall, which ultimately benefits the profitability of the practice. So worth investing in this, but take your time, and if you need help and being pointed in the right direction, again, we can certainly help you there. Stock ordering. One of the things I know, we've done a lot of research over the last 12 months, and we've used all main suppliers out there, especially in terms of consumables. And it's important that you only hold the type of stock that you actually need in your practice, because most of it can be delivered in the next day or two. But at the same time, you should be making sure that you compare prices. So that's one thing we do on our buying group, which is the Samera Alliance. And we're always comparing prices of what we can get compared to other players in the marketplace. And we're always pushing our supplier for better prices for our clients. And that's so important, because ultimately a little bit here or there on, I don't know, filling material or PPE all adds up. So again, if you're looking to save consumables, the Alliance will help you, and I'll talk to you about that later. Paperless, going paperless adds up. Printer ink, But if you have multiple screens on desk, you'll save on printing documents. You can use iPads, and then ultimately all the information that you get from your suppliers, such as invoices, all that type of stuff, you can either scan and send them to your accountants, or they can even be received digitally by yourself and sent to your accountants. So there's actually no printing in that whole process. Now that takes a culture change, but it's a big cost saving. So I know, for instance, in both our clinics, all our invoices for clients, or for the practices, come electronically as PDFs, and then they're sent to my accounting team, which then process them. So there's no actual need to print anything out, which again is efficient, time saving, and ultimately green as well. Utility bills has certainly been in the headlines for a while. I think energy costs are rocketing. I think by October things will probably even be worse, to be quite honest with you. But again, shop around. You can negotiate on these types of things, and we work with a partner in our buyer group that can certainly help on that. Chair downtime. You don't want to have a down chair. You want it to be chairs working all the time. So it's so important that you have these regularly serviced so they don't break down, because if you don't have a chair working, that's probably your biggest cost in your practice. So really important that your equipment is serviced regularly and it can be used when it's needed to. So you have your maximum chair occupancy, because maximum chair occupancy, if you don't have maximum chair occupancy and your chair is down, that's probably your biggest cost in your practice, because you're having to pay for it, you're having to pay for staff, and you're not actually generating any income into the practice. So get that right, get your equipment serviced regularly. So as I mentioned earlier, one of the things is you could join the buying group. Now we have a buying group called the Samera Alliance. We started it about 7 or 8 months ago. We have a lot of dental practices on it already, and it's totally free to join for 2 months. You can try it out, and then it's just a small fee of £60 per month, and there's no obligation to continue if you just join for 2 months and you find it's not right for you. But things that we can save you on are utilities, consumables, HR costs, IT, aesthetics equipment, digital equipment, patient plans, compliance services, you name it, we've got it covered. Because what we've seen is that so many of these areas, there are so many players in the market, but ultimately if we have scale, we can then ultimately negotiate better terms for our members. And then if we've got buying power, which we do, you get better terms and you save some money. Simple, really. And what you'll find is that there aren't really many buying groups here in the UK at the moment. It's a big thing in the US market, and I can see this just growing and growing over the next few years. And because especially in this environment where people want to save money, a buying group is certainly going to help you. And as I said earlier, it's totally free to join. Try it out for 2 months, and there's no obligation to continue if you find it's not right for you. But one of the things we didn't talk about, as I said, we're cutting all these costs. We have to also look at raising fees. Why, you might think? Well, if your costs are rising, you need to think, how can I afford to not raise my fees, or can I afford to raise my fees? It's a kind of a catch-22 situation. But ultimately, you have to think, if you think the demand will be inelastic, i.e. the demand will continue if your prices rise, then certainly raise your prices. Now, other businesses are raising their prices, just from people from supermarkets to builders to you name it. So why shouldn't you be raising your prices? But the way to do it, in my kind of experience, is use something called the 80-20 rule. 80% of your income comes from around 20% of your services. So look at changing these prices firstly. See the impact this may have on your top line, and then you can see, okay, is it working? Is it not working? Should I increase the prices across other items as well? So definitely review your prices as costs are rising. I have to say that, and I know it kind of goes against what perhaps the Bank of England said recently, but no one's going to help you more than yourself. So you're going to have to look at your prices and at the same time see where you can pare back your costs. So that was a very quick rundown on how you can perhaps save some money. But the next area is tax, and this is a question I get all the time from many dentists all the time, and I'm going to go through this as quickly as I can and to help you understand it. So good old Albert Einstein, he says the hardest thing in the world is to understand is income tax, and to be fair, I don't think he's that wrong. It changes every year, the rules change every year. What worked last year might not work this year, and then it might not work next year, but it might work in 3 years' time. It's just a changing beast. So you have to be on top of it, or you have to have a provider or an accountancy firm like ourselves who are aware of all the changes and what's happening. So dentists are an easy target for HMRC. They're high earners from a young age. Many dentists historically have entered various tax schemes in the past, which I've seen are questionable. And having been married to a dentist, I know not all dentists are just as organised as my wife, but they have a very busy workload. So quite often or not, they're an easy target for HMRC. And as dentists, quite a few dentists are high earners, and they're kind of prone to mistakes or errors and not being perhaps most organised. They're easy targets for HMRC. But what's happening in the current tax environment is, as you might be aware, the government's not actually increasing income tax rates at the moment, and they're talking, I think it's in 2024, it's dropping to 19% from memory. I can't remember now, it's coming back to me. But the one thing they did do, they announced at the last budget, is they've frozen all the important tax thresholds until 2026. Now you might think, well, that's good news. No, it's not. It's absolutely awful news, because if inflation was low, fine, but inflation is rocketing, so it's rising rapidly. So ultimately, inflation will erode the threshold very, very quickly. So if you're earning more, you're going to go you're not going to be in the lower tax brackets. You'll be in the higher tax brackets very quickly. And the government's ultimately relying on inflation to push people into the higher tax brackets. In my opinion, very, very sneaky. They kind of talk about, oh, they've frozen all these important thresholds, but the reality of the situation with inflation at 11%, we're talking about by the end of this year, a lot of people will be in tax brackets they never expected to be in, and you'll be paying more tax. In addition, in April this year, national insurance was increased by 1.25%. There was talk of it not happening, and Rishi Sunak going to pull out and not do it, but ultimately it actually happened. And from next year, it's going to be spun off and not called national insurance, but it's actually going to be called the Health and Social Care Levy, just to try and, again, not highlight that it's a tax, but ultimately it is a tax. Okay, so another 1.25%. So just some facts for you to understand then how the tax system is actually working, and how much money you're giving away in terms of tax. So in the current year, the first 12.5, almost 12.5, or just over 12,500 is your personal allowance. You pay 0 tax. Then the next 37,700, you pay 20%, and then above 50,270, you pay 40%, and that's called the higher rate threshold. Now, the range between 100,000 to 125,145 pounds, your personal allowance is actually taken away. So it's reduced by £1 for every £2 you earn over £100,000. So this is a really big sting. So you're in that range of 100k to 125k, you're paying tax at a rate of 60% in that threshold. It's a lot of money. And then if your income goes above 150, you're effectively paying tax at 45% on most types of income, and this is called the additional rate of tax. So that's the tax side of things, which is pretty ugly. And then you've got national insurance, and this is just for self-employed people, which most dentists are. So you've got 0% on the first, you pay class 4 national insurance, 0% on the first 11,908, 10.25 on the next 38,362, and 3.25% above 52,70, plus the weekly charge of £3.15 class 2 national insurance. So now if you think about it, you've got tax and you've got national insurance. So suddenly you've got all of these costs, all of these taxes, and it really turns into something quite ugly. So if you look at 22-23, your first 11,908, you're actually paying nothing, okay? But from 11,908 to 12,570, you have to pay £164, which is the class 2 national insurance, plus 10.25% on the national insurance as well. Then you go from 12,570 to 52,770, you're paying 30.25% in national insurance and tax. That's 20% basic rate and 10.25% national insurance. Then you go from 52,770 to 100,000. So you can get the gist, I think you can see from here. What we're highlighting here is that when you're earning between the 50 to 100 grand range, it's between 43.25. In that 100 to 125, it's 63.25 with all the national insurances. And if you're lucky enough to be earning over £150,000, you're you're effectively giving away 48.25% in taxes and national insurance. So virtually half of your money's gone. So a lot of people think, oh, I'm earning well, I'm earning £150,000, but actually what you have at take home after is just over half of it. So it's quite. So that's why Albert Einstein says it's complex. They've made it complex for people to understand, and it just it's not going to get any rosier, in my opinion. So what are the options that are available to you? So one option that we do for a lot of clients is they do turn their businesses into limited companies. And the thing to highlight here, as a sole trader, you pay income tax on anything you earn or everything you earn. But in a company, you only pay income tax if you take funds out of the company. Now, it's not always the right thing to be in a limited company, and it's not as easy as you think to understand what works best. There are changes in 2023 where company corporate tax rates are actually rising to 25% from the current 19%. So where they give with one, they take with the other. So it's really important to do your sums carefully, as the tax laws are always changing, because if you're going to save on income tax, you might actually pay more on corporate tax. So one of the things we do is actually carry a free assessment out by for clients. Other ways to take money out, if you've got a company, you've got dividends, which you might have heard. That's a way to take money out. I'll come on to that in a minute. You might have loaned money to the business, you can take interest out. Mileage claims, you might rent a property to the business and you can get rental income out. Pension contributions, salary, which is probably not very tax effective, but it's there. Benefits in kind, like electric cars, those types of things. So there are different ways to extract profits from extract profits from the company. So looking at the salary situation, this is usually the most common way of doing it. It's looking at taking a dividend as opposed to a salary. The right mix, this depends on your circumstances, and often a tax efficient salary and dividends is the best route. Also, it has to be considered, is your partner working in the business? Do you have children that may be working in the business? And is it worth using their personal tax-free allowance as well? So you've got to look at all of these options to make it work in the right way. Obviously, if they're working, they have to be working in the business to actually be able to claim, get paid from the company or get paid from the business. But there are jobs that people do, and these are things that can be done. So it's about planning, and this is whilst on a little slide it might look quite straightforward, it's actually quite a complex area. One of the other things for companies, and this isn't for sole traders or partnerships, only for companies, is the opportunity to reduce your tax by investing in plant and machinery assets. And there's something called the super deduction of 130%, which that Mr. Sunak announced in the budget during COVID times, and that's valid until 23. So if you spend 100 grand on equipment, you can claim 130 grand on equipment using the 130% deduction, which can ultimately reduce your tax liability. So again, that's not a bad thing to do. If you're looking to expand or you're spending money on equipment, now's a good time until March 23 to actually reduce your tax liabilities if you think you've got large tax liabilities coming. One of the other areas that many people don't even know this, but it's so important, is if you've got a company, and you can use that to pay your pension contributions. So you get an annual allowance of about £40,000, and if you were making profits in your business, let's say you've got profits of £100,000, you can make a contribution of up to £40,000 if you're a director to your personal pension, and that will reduce your profits from 100 to 60, and ultimately 60k is only taxed as opposed to the 100. And that's to get you an corporation tax relief. It's also much better than paying a salary because there's no national insurance is payable either. And the company has to make the employment as an employer contribution directly from the company to the pension. So there's a process of doing that, but it's all very doable. Again, a great way of saving tax. Salary sacrifice, again, another thing that people do is you might have heard like cycle to work schemes or other ways of doing it. Again, basically what you're doing is sacrificing your salary to get another benefit, and usually it means you don't have to pay national insurance, or the national insurance is paid is much lower by the employee and the employer. And again, if you need some help, we can certainly help you out with that. So that's another thing that people never even know about, but just ask your advisors, or if you need any help about salary sacrifice, where can I help? Where can I save some money? And ultimately your employees will be happier because they're paying less tax and national insurance, and you'll be happier because you're paying lower national insurance. So those are some just general tax of things, but one of the things I really want to highlight to you is going back to this slide that I showed you a minute ago, is this one here. It's really kind of quite stark, isn't it? Showing that the amount of money that we have to pay for our public services through the hard work that we all do. And I'm all for paying my taxes 100%, but it's when you see it in black and white like that, it's thinking, oh my goodness, that's where it all goes. Okay, national insurance is a hidden tax, pretty much, and then you've got all the income taxes on top of that as well. And if you're in that unlucky band of earning between 120, well, if you're earning up to 125,000 pounds, that band between 100 and 125, you're paying over 60% away. So a lot of it goes. So you have to think, how can I be more efficient with my taxes, but also how can I be more efficient with my business? Okay, so where's that going? So that leads me on to the next part, or the final part of the presentation today, is efficiency. And well, I called it time, but it's kind of driving business efficiency and what's happening currently at the moment. What we're seeing is some dental practices are doing great, but others I know are finding the pinch and finding it increasingly harder now. We know the government are broke and they need cash, and they'll be seeking to find cash and penalise as many people as possible and recoup tax to pay for COVID and pay for everything else that they've kind of done and potentially have messed up, in my opinion. And they are hiring new teams of people to recover debt. So it's essentially you do your things right and get organised. But it's also one of the things that we've highlighted here is, from a tax perspective, you want to be able to ultimately reduce your profits. So it's so important that you reduce your profits. So you can actually, but you can only reduce your profits through legitimate business expenses. So whether you're a sole trader or a company, reducing your profits will ultimately reduce the tax you're payable. So we do have on our website, in our learning centre, if you just type in Samera business expenses, there's a page all about this and ideas and things that you can reduce your tax liability, or increase your expenses to ultimately reduce your tax liability with. I won't show that now, I'll show it later. One of the other plans the government has is making tax digital. Now, this is an initiative that has already been kicked off, and it's basically turning everything into a digital plan for tax. So no more shoe boxes, no more sending papers in the post. That won't be accepted. That's not accepted at my firm anymore. And ultimately, every client has to be on some type of digital format, whether it's Excel or whether it's Xero or something like that. And from April 24, everyone eligible has to be on Making Tax Digital. And this was pushed back due to COVID, and you have to use proper software, as I mentioned earlier. So this will affect 1.9 million self-employed businesses, 1.3 million landlords, 0.2 million ordinary partnerships, as we've been told, maybe even more now, I think. But what does this actually mean? So currently, if you're a sole trader, this relates to sole traders, people, not companies, because companies can actually happen in probably 2026, but it's going to happen for sole traders. Now, currently, we have to do one annual submission every year. The last push is to try and get the tax return in before the end of Jan, online, or by October, by 31st of October if it's done by paper, and it's okay to do it on paper. However, from 24, you're going to have to do 4 submissions per business and 1 annual period statement. So and 1 annual final declaration submission per individual. So ultimately, you've got to do 5 submissions a year, and you have to file it electronically using Making Tax Digital compliance software, and it's keeping digital records. So this is a complete culture change. In my opinion, I think it's just the government's going crazy, and it's being introduced in a time where there are enough problems out there, and it's just going to make it even harder for businesses. So some dentists might struggle, but I know the little man in a corner shop will really struggle. They haven't got the first clue what bookkeeping software is, let alone Xero or anything like that. So this is going to be a mess, in my opinion. But in order to counter that mess, you have to get organised and you have to get planned as soon as possible, as early as possible. So, as I said earlier, for sole traders and landlords, it's from April 2024. So if your trade, or your dental trade, adds up to 10K or more, which is quite likely to be, whether you're an associate or whether you're a practice owner, you're going to have to be complying with Making Tax Digital. and that does not include partnership profits, are not included. So that's the timeline. We're at the stage now where 2022, we're in a pilot period for the income tax and self-assessment, and then from 24, income tax for self-employed and landlords greater than 10K, 25 for partnerships, and then 26, we're talking about corporation tax. So we're in now 22, we've got 2 years basically to get our act into gear. And that's what we're really doing with all our clients, is really getting them, every one of our clients, onto a type of software platform, because that's the only way it's going to work. Otherwise, it's just going to be a headache for the client as well as my team. I know that already. So it's so important to get this right. So what does it mean for your practice? You'll need to go completely digital, bottom line. And then how does that work? How do we do it currently? Well, we use some software. We're a Xero partner, and we use Xero products, and Xero is XERO, and we use something called HubDoc. And effectively what happens is, as I said earlier, suppliers send in their invoices electronically to us, and that goes direct. We give them a specific email address, and that goes to HubDoc directly. And that goes there. Now, if we have some paper invoices that may turn up, we can scan those documents and they go into HubDoc as well. And that captures all of the information. It kind of uses optical character recognition software, and it takes all the numbers and everything off it. And then using that technology, AI technology, is then posted into Xero, which is the bookkeeping system. And that is then the software, which is then everything's processed. We have a bank feed coming in, we do bank reconciliations, and we can then start seeing how the practice or business is doing. We can pay staff if we wanted to through it as well. So that's the bookkeeping system. So it's HubDoc and then Xero talk to each other. But from that will be the software that you have to then do the submissions of the 4 quarterly submissions plus the annual submission. So like at the moment, when we do VAT returns for clients, most dental practices aren't VAT returns, but our clients who have non-dental businesses who have VAT return requirements, we have to do the quarterly VAT return through Xero, and that's it, submitted to HMRC automatically. So this is a huge culture shift, and I think it's going to be a huge learning curve for virtually all businesses out there, and it'll be an expensive learning curve for all businesses out there as well. So in conclusion, making tax digital is coming. It's essential to go digital now, not in 2 years, in my opinion. You have to have your financial records organized in a really strong digital system. If you have the system set up, or hopefully ensure no unwarranted HMRC intention and lower tax and NI liabilities, you'll have to keep all your records, especially if they're all electronic. And whilst it may be further admin, longer term, I think it'll make your business more efficient and run a much more efficient business, and since technology is there to help you. But you need to get your head around this, and it's not something that should be done the month before Making Tax Digital is going to start. It needs to be done and planned and organized kind of early, much earlier. So, and at the same time, by going through this process, it will help you review the performance of your practice much more closely. So you can see which costs are high. You can see if you cut your costs on something, what the impact would be. So you're basically effectively tracking with management accounting information how you're doing and what needs to be done. So it's really important that you embrace this rather than resist this. And I know this is just another thing that adds to your list to be done, but it's one of those things that we have to do. So we've talked I've been streaming through these slides and we've been going for 40 odd minutes, and 3 actions to take home tomorrow. Okay, first thing, in terms of saving money, I think the first thing you should look at your accounts and find 3 costs you can reduce. I'm sure there's things you can reduce in your business that may be able to you may be able to cut back. And at the same time, I'd really encourage you to try our buying group, the Samera Alliance. You just type Samera Alliance online. I'll show you the link in a minute. Definitely help you save some money. Next step is look at how you are structured for tax purposes. Are you using all your allowances? Should you be a limited company? Should you be a sole trader? Are you extracting money out of your company in the most efficient way? Are you using pensions? Are you paying yourself a salary which isn't really that tax efficient? Or are you using all the dividend planning opportunities that may be there? That's the tax side of things. And then thirdly, you've got to get ready for making tax digital. Now, not in 2024, you'll drive a better business and ultimately see the benefits early on. So that's kind of the summary, what we're going to do. Just a couple of things, what we do as a firm. We look after literally hundreds of dentists' accounts across the UK, sole traders, and also associates and companies and corporates, you name it. But the common thread between all of them is there's a dental link. We've got plenty of experience, plenty of grey hair in our team to be able to advise. So if you're in the market for looking for a new advisor, please do reach out. We are accountants to over 500 dentists. The buying group is here, SameraAlliance.com. And also we also do raise finance for assets and acquisition. So my colleagues Dan, Nigel and others, if you're looking to buy assets, if you're looking to buy a practice, again, we are very competitive and help people find the best terms available for them. Let me just open up this. This is our Samera Alliance website. You can see we've got partners on here, if I can find them. Got a whole range of partners from Rights to Densura to Beacon Plus to you name it, compliance, software, Krona, you name it. We've got equipment people, solicitors, you name it. So if you're in the market to save money, we've got partners in a whole range of areas, and I reckon we can certainly save you money, not in just one area, but a multitude of areas. So separately, other things that I think you should be trying to look out for with some free resources that we have. So we have on our website, the Samera website, we've got a cost of living crisis tips blog page, and we're adding to this. This was just recently started, and I'm basically creating some videos and tips and ideas on here for you to help you save money during this cost of living. So I don't think this cost of living crisis is going to go that quickly. I think it will be around for a while in different guises, and therefore we need to be adaptable. And this page is there to provide advice and tips that I have, and if you've got any ideas or tips or questions, I'll be happy to answer them and actually put a video on it and give you my opinion on these things as well. Excuse me. In addition, I do have a YouTube page, and there's further videos. Hi, Arun here. You don't want to hear me talk, but there's a whole load of videos from the cost of living side of things to if you're looking to buy a practice, to start a practice, raise finance for practices, podcasts, you name it, it's all there. It's all there. So do check out and just type in Arun Mehra 24/7. You can probably see at the top there. Get back to the slides and make sure you subscribe to that page as well. If you want any help or advice, just drop me an email on arun@samera.co.uk. Alternatively, you can book a call with my team, and you can do a virtual consult. We have calls with a whole range of people in the team, whether it's accountancy or myself or finance. So it's all done. A lot of the calls are done in the evenings and those part of the day. Okay. So if you need any contacts, I know a lot of dentists are working during the day. So if you need anything there. And then lastly, one of the things that we do have, we have a money boot camp coming up. And if you've liked what you heard today, this was just a real taste of what we will cover, a little taste of what we'll do. We're going to talk about understanding your money, protecting your money, saving your money, and growing your money. So if I go to that slide, should be there somewhere. Let's go through this video now. It's on the home page of the website, and you can read this in your own time. But we're going to be talking about how to. A lot of it's about financial education. So we'll be looking at the basic building blocks of finance, how to handle your emotions in these times, because what we're seeing at the moment is the successful people with their money will be people who manage their emotions well, not ones who get scared because the market's dropping or costs are rising. Other angles will be how you protect your money, looking at other inflation busting ideas for how you save money, and then more importantly, during this time of volatility and uncertainty, is thinking actually how do I grow my money, especially using tax efficient strategies. And really important thing, and I haven't talked about it today, but because it's not really relevant, but going forward, the most successful people are ultimately people who diversify their income streams. So it's so important to, if you're going to grow your portfolio, grow your money, is to actually have a diverse portfolio, whether it's dental practices, shares, property, fine wine, whatever it may be that you're into. Okay, but have a diverse portfolio. and allocate your assets accordingly. So this is an event, it's specifically around money, and this is kind of my hot topic and my area of expertise. So if you're interested, you can book some tickets. It's all online. It's on a Saturday, July the 2nd, and it's $199 per person. And then finally, if we go back to the slides, the last slide here today is just want to highlight this. I've seen it time and time again. I've been in the industry a long time, and I've been an advisor for a long time, and seen it. History always repeats itself. We see so many people put their head in the sand. Don't put your head in the sand. Inflation isn't going to go away if you put your head in the sand. Interest rates aren't going to go down if you put your head in the sand. Staff demands to put their prices, put their salaries up isn't going to go away by you putting your head in the sand. You actually have to get your head out of the sand and seek help, okay, and talk to people and join webinars like this. Join the other webinar I talked about. Ping me an email, check our blog pages out, check the videos out, get in touch. We're here to help you, and we'd be delighted to hopefully guide you in the right way. We've got a team of people who've got a lot of experience. We've seen recessions before, and we've got access to a lot of people and ideas that we can always point you in the right direction. Okay, so thank you very much. I hope you've enjoyed this kind of a 50-minute brain dump on you, on how to save some tax, save some money, and how to drive a more efficient business as we continue through 2022. Thank you.
Arun, that was brilliant. Thank you very much. I'll just stop your screen sharing, and then you can see me as well. Loads of information. I thought your 3 action points at the end were great. I think the benefit of these webinars is to take something home that you can then focus on tomorrow. I think, as you said, it was a lot of information. We do actually have another webinar with Arun looking at making the tax digital stuff on the 29th of September. So if that little snippet of information has left you with more questions and answers, it's open for bookings on the website. So we can run through those sorts of things then. We have had some questions, Arun, so I'm going to get starting with them if that's okay. So first question we've had, it says, being a self-employed dentist, what and how can I reduce my tax liabilities? Any investments, courses or equipment I can do or purchase?
So if you're buying equipment for the purpose of your dental practice, okay, you'll do it for your trade, most of that or a lot of that could be claimed. So whether it's equipment like dental loops or uniforms or courses that you're going on, now we have to look at what type of courses you're doing to ascertain can they all be fully claimed. But they're 9 times out of 10 it should be possible to do. In addition, to save tax, it's, as I mentioned earlier, you could, if you're a sole trader, it could be an angle to turn into a limited company and save some tax that way. So we have to look at all the options. There's no right answer here, Rebecca. It's just every situation is different and
Yep.
everyone has different. But yeah, get in touch if you need any help.
Okay, perfect. Right, next question. Do the legal benefits of holding a practice in a company outweigh the extra taxation on profits and dividends?
Yeah, quite possibly, because I think there are certainly legal benefits of running in a company, but then also the tax savings could be there if you're not taking lots of money out of the company and you're keeping the money in the company. There are certain advantages to doing that if you don't need to take the money out of the company. So, however, to caveat all of that, the tax rates are going up next year, which don't make it so attractive. But I would probably still suggest a company is the right route, okay, especially if you're trying to grow and develop and do better and organize affairs.
Okay, perfect. I think there's going to be lots of people calling you or their accountant tomorrow after this. Okay, so another question that we've had just come in. Do you do accounts for property tax if one invests in property investments, private rental sector, as well as for the dental sector?
Yeah, we do a whole range of things. So if you look at our client base, it's 98% dentists, and that 2% tends to be dentists who own property. So so we have a lot of property stuff that we do. Okay, and to be honest, I'm quite an avid property investor myself, so I've got quite a lot of experience in that.
Okay, perfect. So whoever asked that question, get in touch with Arun. If you don't have his contact details, I do, so we can definitely put you guys in touch. Okay, I think we've got time for one more question. What is the electric incentive for companies, and does it apply for self-employed individuals like most dentists are, both associates and practice owners?
Electric. Oh, is that for the electric cars? Is it? I'm assuming that is. Yeah. So I'm
Okay, yeah.
assuming the question is, well, let's just. I'll go with that route. Electric
Yeah.
cars. So an electric car is something that you could buy. You can buy or lease or whatever. Now, the real benefit in an electric car is the benefit in kind is very low. So if you bought a petrol car or a diesel car, you have to pay, and they have like high CO2 emissions. Okay. Whereas electric cars have very low CO2 emissions. So the benefit in kind percentage is very low, and this is valid until 2025, I think, from memory. So it's very advantageous. If you're going to buy a car, bottom line, buy an electric car. Now, if you buy it through your company or buy it through your business, it's only the personal and the business element that you can technically claim. So it'll be a proportion of it, okay? But it's still hugely advantageous. So if I look at my client list, virtually all of them have got electric cars, not all, but a lot have got electric cars now. Or the next car they'll be buying is electric cars. So and it's a no-brainer, to be brutally honest with you. Okay.
Okay, perfect. Right, I'm just checking. I think those are the questions that have come in. So I think if no one's got any more questions, we will wrap it up. As I said, I think your 3 action points was great, Arun. As Arun said, they've got a great team. So any questions or queries, you can always pass over to them, and also the resources on their website. So from my point of view, this is a massive thanks to you, Arun. As a lot of information. But yeah,
Sure.
hopefully it answered some questions and probably generated some questions.
I hope. I'm sure it's generated more questions, but I just want to say thank you very much for hosting me tonight. I think for anyone out there who's the environment is getting tougher, okay?
Yeah.
And the only way to get through this environment is by joining webinars, talking to people, getting ideas. Your first port of call is not necessarily emailing me. Just check out our blog page. We'll be sharing a lot of information on there, totally free of charge. And then if anything stimulates your interest, you know where we are. You can get in touch.